So everyone's talking about Trump's proposal for a 50-year mortgage. And although it may seem super far-fetched, it's actually getting some traction as the Trump administration has not only pitched it publicly, but they literally have the Federal Housing Finance Agency working on it, and government-owned companies like Fannie Mae and Freddie Mac are both being pulled to support a 50-year mortgage product. Now, my name is Daniel Kwak, one half of the Kwak brothers, and this may sound extremely arrogant, but I might be one of the most credible people to speak on this topic. You see, my brother Sam and I own a company called Accelerated Strategies, where for years now we've helped thousands of families pay off their mortgage in a fraction of the time while saving tens of thousands of dollars that they otherwise would have paid towards interest. And unlike some real estate agents and mortgage brokers that may actually hope this happens because it would make them a lot of money, as someone who's helped a lot of people across the country pay off their mortgage faster, saving a fortune in the process, I'm definitely on your side here. Now, I'm gonna give my expert opinion at the end of this video, but first let's look at the biggest con and the biggest pro of a 50-year mortgage, starting with the con first. And for us to do that, we have to understand why the 30-year mortgage is oftentimes the most misunderstood financial vehicle like ever. And it all revolves around the word amortization and how 99% of you watching probably don't understand how much it's hurting you. Because here's the trick most people never see. In the beginning, almost all of your monthly payment goes towards interest and not principal. And interest is the pure profit the banks make off of loaning you the money. So let's say you buy a $500,000 home at 6% interest and you put 9% down, which is what the average first-time homebuyer put down in the year of 2025. Your monthly payment ends up being a little over $2,700, and that's not even including taxes and insurance. However, in your first monthly payment, roughly $2,200 of that $2,700 goes to interest, and only about $500 actually reduces your loan balance. So even though you're making payments every month, your equity grows at the pace of a snail for the first decade or so. And that's by design, because the bank collects their interest up front. And over time, as your balance slowly shrinks, you begin paying slightly less interest and a little bit more principal each month. Now, do you want to know how long you have to wait before you start paying more principal than interest in your monthly payment? Roughly 20 years. But by then, the bank has already made a vast majority of the money that they'll make off of you through interest. And if that wasn't bad enough, it gets absolutely worse if you choose to refinance. Because when you refinance, like most Americans do, you're basically starting the clock over. Because you might get a lower rate, maybe even a smaller payment, but you're also resetting your amortization schedule back to day one. So all that progress that you made paying down principal is gone, and you're back to mostly paying interest again. And that's why banks love sending out pieces of mail to your house, selling you on a refinance, because it looks like they're helping you save on monthly payments, but in reality, they've just created another 30 years of guaranteed income for themselves. Even worse, many people refinance multiple times to cash out, remodel, or maybe to even consolidate debt. But what they're actually doing is extending the timeline, paying new fees, and trapping themselves in another heavy cycle of interest payments. It's like running a marathon, getting to mile 20, and then being told, hey, let's restart the race because we're giving you better shoes. In fact, going back to our previous scenario, if you buy that $500,000 house with 9% down, 6% interest over 30 years, even without refinancing just once, you end up paying a total of $982,063.76, but $527,063.76 is just on interest alone. The same scenario with a 50-year mortgage, total, you would pay over $1.4 million, with about $1 million of that going towards interest, which means the banks literally make double what they make off of you with the introduction of a 50-year mortgage product. And you want to know the saddest part? It would only decrease your monthly payment by about $300 a month, which totally goes against the entire point of why this was introduced. Okay, so now let's talk pros. Now, at the end of the day, do I believe Trump is a smart guy? I actually do. In fact, whenever it comes time to vote, I read both candidates' economic policies and make my decision from there. Because one, it's a topic that I understand better than a vast majority of Americans. But two, as somebody who's had to earn their citizenship, I'm not loyal to one party. I'm loyal to the United States of America. Cue the Eagles. And in the most recent election, I agreed more with his policy than his opponent, Kamala Harris, or in her case, the lack thereof. You see, Trump understands one thing really well, which is that one of, if not the biggest pillar of the economic system is the housing market. And here's what I mean by that. Think about all the industries that are affected both directly and indirectly from the housing market. You have manufacturing and construction, and not just the fact that you'll now see millions of new homes being built due to home prices skyrocketing and the profit margins with it for home builders, but also literally the hundreds of different materials and parts needed to not just build homes, but condos, apartments, townhomes, you name it. You have home goods, retail, and consumer products, which is everything from furniture, home decor, to home-related technology companies such as Ring. Literally the entire banking industry, considering this whole video is about mortgages, labor and employment, the entire real estate investment industry, because who's to say that if there are 50-year mortgages for homes, commercial properties won't be next. And the one point I haven't seen anyone make, which is how much the local government will benefit. Because if we're all able to get 50-year mortgages, then home prices will skyrocket, meaning the assessed value in which taxes are calculated against will also go up, which one could argue will do great for our public education system. So on top of all the industries tied to the housing market, which I'm sure I missed a bunch, and the significant increase in tax revenue, think about all the companies represented in the stock market affected by those industries and how it will affect capital markets and the average American's investing holdings. And if that wasn't enough, we can't forget that the biggest economic crash in most of our lifetimes happened because financial instruments that were backed by the housing market failed. So after a lot of thought, here's my opinion. All things considered, is having a 50-year mortgage a positive thing? My answer is no. And here's why. Because I can make a strong argument that if a 50-year mortgage got introduced today, the next 3 to 4 years would show an epic economic boom. At the end of the day, it's basic human mass psychology. A massive increase in home prices due to a 50-year mortgage brings with it massive amounts of positive equity for current homeowners. And the past will show you that whenever you give Americans a reason to spend money, or in this case, an excuse, they will. AKA those stimulus checks we all got 4 or 5 years ago and what it did to the stock market, cryptocurrency market, real estate, and shoot, even Pokemon cards. However, beyond 5 years, it would be a nightmare, considering that it would make housing completely unaffordable for the new wave of first-time homebuyers, because there's no way that wages will increase enough to compete with home prices that come with a 50-year mortgage. It's literally impossible. And what we're going to see is a significant increase in renters, taking away the primary vehicle for Americans building any form of equity for themselves. And as a result, I believe over a 10, 20-year period, it would absolutely destroy the middle class. And if that were to ever happen, well, that's game over. Now, all that being said, guys, if you are interested in learning how to pay off your mortgage faster, saving a fortune in the process without having to change your lifestyle or make any more money, my brother Sam does a free training that you guys will have access to in the description below. But outside of that, thank you so much for watching, and I'll see you guys in the next one.